You opened one of Meta's apps today, Facebook, Instagram, WhatsApp, or Messenger. Almost everyone watching this did. And last quarter, Meta made more money than in any 3 months in its whole history. A record profit, up 61%. But in that same report, one number went the other way. For the first time ever, fewer people opened Meta's apps than the 3 months before. The best quarter Meta ever had, and the first time it ever shrank. Both true. Let's open the report. First, how big Meta actually is. More than 3.5 billion people open one of its apps every single day. That's more than a third of everyone alive. Last year, Meta made about $201 billion, and this year, a research firm called eMarketer says Meta will pass Google in ad money for the first time ever. Google had been number one for as long as anyone can remember. So the story everyone tells about Meta is simple. It's a machine that never stops getting bigger. More people every year, and more money every year. So you'd expect a record quarter to send the stock up. Instead, it dropped about 10% the next day. In that one day, Meta lost about $175 billion of its value. A record quarter, and investors ran for the exits. Why? There are two things inside this report they were staring at. The headlines mostly skipped both. Let's start with the one anybody can understand. People. In March, 3.56 billion people opened the Meta app on a normal day. 3 months before, it was 3.58 billion. That's about 20 million fewer people, out of 3.5 billion. That's tiny, almost a rounding error. So why did anyone care? One word, first. Meta has reported this combined number across all four of its apps for years. It had never once gone down. Not when Facebook had its big privacy scandals, not during COVID, when everyone was stuck at home using it more. The number only ever went up. Years of going up, then down. That's why people noticed. And there's history here. The last time a Meta user number fell, back when it was just Facebook app on its own. The stock had its worst single day in company history. About a quarter of its value gone in a few hours. So, when a user number drops, Wall Street stops and stares. So what finally did it? Meta has an answer, and they said it right on their earnings call. There was a war in Iran that knocked out the internet for a lot of people, and Russia blocked WhatsApp. Meta's money chief, the CFO, said that without those two things, the number would have gone up like always. Their explanation was, it wasn't us. It was a war and the government ban. And here's the strange part. That's probably true. But let's sit with what that means. Meta is now so big that the only way to lose people is for a war to break out or a country to ban an app. On its own, it's barely adding anyone new. It's almost out of new people to add. When you already reach a third of the planet, there aren't many humans left who haven't signed up. So the next question is obvious. If you can't grow by adding people, how do you grow? Meta's answer is to spend. A lot. This next word is capex. That's just the money a company spends building big things. For Meta, it's giant buildings full of computers that run AI. Meta says it will spend between $125 and $145 billion on this in 2026. Last year, it spent about $72 billion. So it's nearly doubling that in a single year. And that's the pill that scared investors. Not the record profit, the size of the spending. Then there is the part of Meta that already loses money on purpose. It's called Reality Labs. That's the group that builds VR headsets and smart glasses. Last quarter, Reality Labs sold $402 million of gear, and it lost $4 billion doing it. It lost about $10 for every $1 it made. Add up every quarter since 2020, and Reality Lab has now lost about $83.5 billion. $83 billion. Gone. Into a product most people you know have never tried once. So line it all up. The old way to grow, adding people, is almost out of room. The big new bet, those headsets, has lost $83 billion. And the company is about to spend up to $145 billion more. And somehow, in that exact quarter, Meta reported the biggest profit in its history, up 61%. That doesn't fit unless you read one more line, the line almost nobody talks about. Now here's the line. Of that record, $8 billion came from a one tax break. A tax break is like a refund. The government changed the rule, and Meta got money back. It's real money, but it only happens once. It didn't come from selling more ads. It didn't come from the business getting better. So take that 8 billion out. The profit still grew, but not 61%, more like 14%. Still good, just not a record. The record part was mostly the tax break. Now you can see the whole quarter at once, and it's almost the opposite of the headline. The profit looked giant because of one-time refund. The number of people went down for the first time ever. The old way to grow is almost out of room. And the company is about to spend up to $145 billion trying to find a new one. That's the real story. Meta isn't dying. It's still making a fortune. But for 20 years, the bet on Meta was simple. It gets bigger every year, forever. More people, more money, no limits. This quarter, for the first time, you can see the limit. The people number stopped going up, and the only reason given was things Meta can't control, a war and a ban. That's why they're spending $145 billion on AI, not because the old business is broken, because the easy growth, just adding more humans, is almost done. They need a new way to grow before the old one runs out. The quarter that looked like Meta's biggest win might be the one where the easy parts quietly ended. One quarter doesn't settle anything. Meta still reaches a third of the planet and makes a fortune doing it. But here's what to actually watch. Next quarter, does the people number climb back once the war and the ban fade? If it does, this was a blip. If it stays flat, the limit is real. And watch the spending. Meta is betting up to $145 billion that AI becomes its new way to grow. If that works, nobody will remember this quarter. If it doesn't, a maxed out user base and the $145 billion bill start to look very different together. So here's the real question, and there are two fair sides. 1. It was only a war and a ban. Meta is fine, and the AI spending is smart. 2. This was the quarter Meta quietly hit its limit. The record profit was mostly a tax break, and the spending is panic dressed up as a plan. Tell me which side you're in the comments. And if you want the line-by-line walkthrough of every number in this video, the actual filing, the exact figures, the sources, that's what Footnote Brief is. Link in description and pinned comment, it's free.